Well, it seems there's been a ceasefire in the US-China trade war, but what was achieved and how much damage was done? So hi there everyone, welcome to the Traders Circle Weekly Market Update. Today is Tuesday the 13th of May 2025, and before I get started, you do need to be aware that whatever I say is general advice only. So is the trade war over? It seems like the tariffs have largely been put on hold for 90 days. That follows the 90-day pause in the reciprocal tariffs against every other nation but China. And markets loved it. You know, we saw America reduce their tariffs on China down to 30%, the 10% standard rate for everyone, and then the 20% fentanyl levy. And China, for their part, reduced the tariffs on US imports back down to 10%. The real question is why any of this was done in the first place, if America was going to immediately back down by the looks. And to be honest, it leaves one sort of scratching their heads. Is this to allow time for manufacturers to build factories back in the United States? Will any of them be willing to, given how rapidly and quickly trade policy seems to be changing? For their part, the Chinese seem convinced that they've basically done one over on Trump, and that might be the case. On the products that they import to China, they probably don't want high tariffs. They mostly import agricultural products and things of that nature. And ideally, they don't want to be paying any additional amount of tax on those food products. For the tariffs into the US, the 30%, will it be enough to make Chinese imports to the US uncompetitive against local alternatives? I don't think so. I don't think so at all. So I really do think it was Trump who blinked and backed down first. To be honest, I think he was forced to by financial markets. I'm not necessarily talking about the equity market. The equity market's rebounded quite strongly. I think they basically anticipated that some sort of arrangement would be made. Instead, I'm talking about the bond markets and the currency markets, both of which showed rapidly waning confidence in the US government, US authorities, and perhaps even US hegemony in global politics. So really it was, for me, a bit of a back down from the US, and perhaps they were forced into that position. The real sort of question will be where to from here. If we do see these reciprocal tariffs brought in after the 90 days, obviously the first 90-day pause against everyone else but China is going to expire in about 2 months, and then about a month after, the Chinese pause will come in. The US government or Trump and his team seem to be hoping or willing or trying really hard to sign trade deals, sign trade agreements across that 90 days so that those additional tariffs aren't brought in. The trade deal that they signed with the UK, however, it didn't really have too many sort of big wins for the Americans. Again, I have to sort of question what the motive of the trade war was. Was it really trying to bring manufacturing and jobs and things like that back to the US? Or was it really just sort of a bit of gamesmanship and brinkmanship for a man who loves the art of the deal and he's just trying to foster an environment where he can basically say he's created deals? I think there's plenty of evidence, and it could be another example of Trump basically trying to create a problem and then solve it to say, here, I've solved a problem. Overall, I think Americans are going to be worse off as a result. We saw the first quarter US GDP came in negative. Second quarter is probably going to be positive now, given everything seems to be wound back. But a lot of that positivity is probably going to come from inventory from imports that were brought forward into the first quarter. So I do think a lot of damage has been done economically, reputationally, and I think if this is really the sort of end of it, I think a lot of people would be left scratching their heads as to why it all happened. The next sort of thing to discuss is inflation. We're going to see a US inflation report for April tonight. It's going to come out, right around midnight tonight, and it's expected to show that US inflation in April is basically at the same level of growth that it was in March. It's not really continuing to trend lower, but it perhaps isn't starting to pick back up. Now, it is worth keeping in mind that this inflation reading doesn't include most of the tariff period, and that's because goods that were already in transit when the tariffs were announced weren't subject to those tariffs. It's only goods that are starting to arrive now In fact, over the weekend, that were starting to be charged the higher tariff rates. So if inflation is flat, what does that mean for the Fed? What does that mean for US interest rates? I think that means the Fed will continue to pause. I don't think they're going to look to cut anytime soon until they wait to see what the wash-up of all this craziness is. If inflation starts to tick back up, then you can definitely rule out interest rate cuts from the US anytime soon. If inflation is down a little bit in April, I think they still will wait and still wait to see what all the effects of the tariffs and what's gone on over the past couple of weeks will be. For Australia, though, it's a bit of a different story. The Australian inflation rate is back inside the RBA's target range. It has been steadily ticking lower over the past sort of 6 months, and the RBA is expected to cut interest rates further locally when they meet next week. So next Tuesday, if you're watching my next video, I'm guessing that I'll be talking about 0.25% RBA rate cut. Markets are pricing that in, and they're pricing in another 4 rate cuts this year as well. So locally, those RBA rate cuts, I think, are helping to support our stock market, but probably also things like the real estate market and other financial markets in Australia. Just anecdotally, looking in my area, it does seem like house prices are starting to pick back up, and with the Labor election victory, or even had the other side won, the policies are also likely to support the housing market. So yeah, look, I think my best guess is that house prices will continue to rise pretty steadily. There's strong population growth, largely driven through immigration. It's going to put additional stress on housing demand, and we're really not building enough supply to keep up with it. So that means that house prices, unfortunately, or depending on your perspective, are probably going to continue to climb locally as well. We've also got a lot of company earnings reporting at the moment. There's been a reporting season in the US that's just wrapping up. That was pretty underwhelming. Usually they have about 3/4 of their stock market beat their earnings expectations. I know that sounds odd. Why would 3/4 always beat expectations? It should be half. And that's basically because the system is rigged over there for analysts to always put out reports that underestimate earnings, and then the companies easily beat those lowered expectations. This season, though, the number of beats was a little bit lower than usual, but more importantly, we had a lot of companies lowering or removing altogether their forward guidance. That's not usually a very good sign for the US share market, not usually a good sign for the US economy, and a lot of it was due to the tariff uncertainty. Companies not really sure how things are going to look for them in the second half. So, now that the ceasefire has been signed, will that change things? I'm not too sure, but it's definitely something that we're going to have to keep an eye on. Locally as well, in Australia, we've also seen some reporting. We've seen ANZ, NAB, Westpac and Macquarie report earnings. Westpac and ANZ both fell after their results. NAB and Macquarie both rose after their results. I think the interesting trend for the domestic focused banks, ANZ, NAB, Westpac and CBA, is that earnings have been largely flat for the last 3 years. In that time, the share prices have risen quite strongly. And so I do think it's going to be hard for them to go too much further unless we start to see earnings growth resume for that sector. Will house prices bring about some earnings growth for the banks? I'm not too sure. To be honest, recently where house prices have grown, competition has actually eaten away into that potential growth and profitability. We've also seen a big increase in their expenses, likely due to things like wages and other costs rising for them. And so, to be honest, I think it's been a pretty underwhelming bank reporting season. Certainly for me, it doesn't justify continued record high share prices for the space. Now, we will see perhaps the most important one tomorrow, which is CBA's report. Theirs is only a quarterly report. The others reported half-year or full-year results. But CBA is the biggest bank in the country, and it's the most expensive bank on earth. It's trading at earnings multiples that banks have never reached before, and its dividend yield is lower than you can get on an Australian government bond. So, I do think it's going to be important as to whether we see these banks maintain these very high valuations, or whether we see the valuations start to normalize a little bit. So CBA's quarterly is going to come out tomorrow morning. I think our whole banking space, in fact, our whole share market will probably move on the back of that result. So let's have a quick look at the charts for this week, and this is the US S&P 500 index. That had a huge night overnight, jumping over 3% after the trade ceasefire was announced. They've been on this steady uptrend since the lows in April, and that was when Trump was basically trying to dream up the biggest numbers he could think of to levy on China. And since then, we've seen a bit of a return to normalcy, and they returned to roughly their peak at the very end of March. That was roughly 5,800. They jumped strongly through that level overnight with the trade ceasefire announced. Technically, that's a positive sign. A breakthrough resistance, continuing on the uptrend, breaking through the moving averages, and it suggests that we're probably going to see further upside. The upside targets are probably 6,000 index points, and then 6125 after that, roughly the all-time high. I'm not sure we're going to see it all the way back up there, and that's because I think a lot of economic damage has been done, and we might see some sort of profit taking. We might see some cooler heads return to the market over the coming sort of week or so. But an interesting one to watch because technically it does look quite bullish, and it does suggest further upwards movement. So if we have a quick look at the Australian market, and this is the Australian XJO index, the top 200 shares listed on our market. And it's also enjoyed a nice strong bounce since the lows at the start of April. We've actually outperformed US markets over this period, and we can't get a good trend line in. We actually broke the initial uptrend, but we are continuing to move higher. We broke above our key level at 8150. That was also where the 200-day moving average was. And we've sort of ground a little bit higher since then. We've been up for 5 sessions straight, and you have to say that the upside target is probably 83.50, a bit of a historical level for us. However, over the past few sessions, despite strength overseas, we have been a little bit more reluctant to keep pushing higher. We've sort of, probably been clinging a bit more towards 82.50, and I would suggest the reason for that is we've seen dividends come out of the banks. We've seen a little bit of reluctance to buy some of those banks, and where we have seen commodities prices move up, it hasn't really been to levels they were trading at earlier in the year. So perhaps a bit of a confluence of factors slowing our market down over the past few sessions. And I do think that if we see a little bit of profit taking in the US, that'll probably mean our own market sees a bit of profit taking as well. I think to the downside, probably around 82.50, maybe sort of 8200, 81.50 if the US sees some meaningful selling. But otherwise, overall, we look pretty much bullish as well. Maybe just a little bit overdone in the short term. So I will wrap it up there for this week, guys. Hopefully you guys enjoyed. Next week I'll be talking about the RBA with their potential rate cut on Tuesday, and hope to see you guys in that video as well. So if you did enjoy, click like, click subscribe, and we'll see you next time.